Ladies and gentlemen, welcome back to the Crypto News Podcast. It's your host, Matt Zahab. We are buzzing as always, enjoying the last couple weeks of good weather for the folks in sort of the Western Hemisphere, I guess the Northwestern Hemisphere like me, before it just gets so bloody cold and miserable that we all have to leave. Keep on touching grass, keep on enjoying life outside of crypto. And folks, when November comes around, hopefully things will ramp up again and the party will start. The parade will be back in motion. But until then, we got to get right to the intro here. Super pumped to have Patrick Mullin on the show today. Hong Kong-based entrepreneur and builder focused on DeFi, blockchain tech, digital assets, and Web3. John has been investing and building in crypto and digital assets for over 10 years, having worked in DeFi and exchange brokerage businesses. He helped found Mantra, a layer 1 blockchain for RWA tokenization. Can't wait to get into this. And has raised tens of millions of dollars for various ventures while working with a dedicated team of 50 plus builders worldwide. Coming in hot from Hong Kong. JP, pumped to have you on the show today, my friend. How you doing?
Doing well, man. Thanks for having me. Looking forward to the conversation, and it's a lot of excitement around what we're building right now. Mainnet's coming soon, so really pumped to hopefully give a little bit more about the RWA space and a little bit more about some Mantra Alpha.
I love it. Absolutely love it. Before the show, you and I were shooting the shit. You were based in Hong Kong. I've never been. It looks absolutely incredible. I believe I didn't ask you if you're Canadian or American. You got one of the two, most likely American, I would assume.
American.
As you and I sound very, very similar. The only difference is that I probably say A and you don't. But as an American living in Hong Kong, what's that like? Tell me all about it. I've always wanted to go. It looks so freaking cool.
Yeah, Hong Kong's awesome. I've been living here for nearly 7 years now. Spent pretty much my whole entire adult life outside the US. So grew up in the Midwest, primarily Cincinnati, Ohio, and St. Louis, Missouri. But moved out of the country for university at 18. Moved to Madrid, Spain, did my undergraduate studies there. Then did a very short stint in an exchange in Brussels, Belgium. Back to Spain. Then did a master's in Germany, then another master's in Shanghai, worked at a bank in Shanghai, and then moved down here. So I've been kind of all over the place. Asia is definitely home. Spend the majority of my time in Hong Kong, Dubai, and on a plane.
You got a couple of miles under your belt, eh?
Just a couple.
I love it. And if you don't mind me asking, how's the Mandarin or Cantonese?
So when I lived in Shanghai, I did... Actually, I'm good with languages, but Romance languages. So I speak Spanish, German, French, a little Italian, a little French, a little Italian, a little Portuguese. Moved to Shanghai, didn't speak anything, any Mando, and picked it up a little bit. But then when I moved down to Hong Kong, Cantonese has I think 9 tones, whereas Mandarin has 6.
God,
6 is already hard. 9 was everyone here speaks English, to be honest, which is maybe a poor excuse, but I can basically speak taxi Cantonese. So I can get around, I can order some basic food, and that's about it.
I love it. I'm the same as you, just the Latin Romance languages, English, French, Spanish, but I'd love to learn some Cantonese, Mandarin, or Arabic, but I try on Duolingo and my mouth just doesn't allow me to, I can't get my tongue and mouth to move the way I want it to, it's so friggin' hard.
It's definitely not easy.
That's
with the
wild.
tones and I think also with those languages as well, like the reading and the characters and just the different alphabets does also create a bit of a challenge. You have to learn a number of different facets rather than like Romance languages or Latin languages where it's the same alphabet.
Yeah, you
can sound stuff out.
Exactly. Yeah, you could just speak some Spanglish or some Franglish, and it always works. But
exactly.
Let's jump into JP before blockchain here, just to set the tone, set the table, if you will. Tell us a little bit about your past before you got into crypto, and then your journey into crypto.
Sure. So, I moved to Spain when I was 18 years old. Was studying international business there at an American university. I was a pretty early adopter of Bitcoin. So, probably I guess it was my sophomore, junior year in college, like 2013, got into Bitcoin. One of my buddies, Trey, was a computer science major. And he was like, you should check out this Bitcoin thing. I was like, okay, it's kind of interesting. Didn't really completely understand it at the time. Was, much more on a traditional, want to be a banker, want to be a consultant, want to be like a businessman. I didn't really know what I exactly want to do, but that was like the general trajectory. Ended up graduating at like the height of the European financial crisis in Spain, no jobs for anyone really, let alone foreigners. And ended up doing my master's, as I mentioned, in Germany. So moved up to a little city outside of Frankfurt. That was like a pretty serious, rigorous program. The Germans are generally relatively serious folks. Yeah. Good people, but they're got their shit together. And I think there was where I kind of really found that there could be, at least some degree of connection between my just general interest in tech. I'm not a technical person per se. I don't code. I've always been more of a business side, but I am technically savvy, and that was really right around the advent of like, the buzzword of fintech, basically, and it wasn't just only blockchain or crypto or anything like that. It was actually a little bit earlier, and I found that there could actually be really interesting use cases for technology within finance. That exacerbated even more when I moved to Shanghai in 2015. And then, that was like really the advent of kind of like retail fintech applications in the palm of your hand with, Alibaba and Tencent with their WeChat Pay, Alipay, et cetera. And I was like, wow, this is pretty incredible. Has a very big impact on your life. But, I still was on that more traditional path, ended up working at a bank. I got a job as an intern at like a very local state-owned investment bank in Shanghai called Guotai Junan Securities. It's basically like the Morgan Stanley of China, but if you don't live in this part of the world, you've never heard of it. And I was one of the only foreigners, like they call foreigners, particularly white people, Laowais. But basically, I was one of the only Laowai or foreigners who worked in this company, and it was a very interesting experience. Eventually, it ended up transitioning into like a role where I was doing research specifically related to emerging technologies. So I had like all of these things come together, and that's really when I started just like going really, really deep into blockchain and crypto, because I was just writing all my reports about it. That was my job. I don't really I'm not a researcher. That's not really my biggest passion, but it was a way in. And that was kind of like the foundation for everything, basically.
It's so cool. I love that you brought up WeChat. I think I first saw WeChat, I want to say 5-6 years ago, one of my Asian buddies in Toronto, and he was showing it to us. And again, while in Toronto, he couldn't even show us like the full capabilities. But I was like, this is fucking wild. The fact that you guys have this super app, everything baked into one. And present day, I feel like that's what a lot of crypto is trying to do. We're trying to build that consumer facing app that will onboard the masses, will create some type of FOMO similar to the Web2 and Facebook. I remember, I feel like you and I are the same age. If your junior year of college was 2013, I'm a 95. You're probably pretty darn close to me. But I remembered the Facebook FOMO when I was in like grade 7 or 8. I was one of the first people to get it, and onboarding all your friends. Like if you weren't on it, you really lost out. It was the same with Insta, and crypto needs that, right? So it's like, and then you have parts of the world like Argentina and Venezuela, where their currencies are such a dog's breakfast that they actually use currency in everyday life. And then you have Westerners like myself and you, where we use crypto for, degen stuff and a store of value and really nothing else. Like I'll send some crypto to contractors across the world for business, but I'm not sending crypto to friends, So when it comes to just sort of different parts of the world, it's so wild how the Western world really only uses crypto for the degen stuff, Yeah,
100%. It's definitely, we haven't had that like killer app. And I was at the Korea Blockchain Week last week in Seoul, and went to this dinner that Story Protocol, which is that new layer 1 for IP, was hosting. And they had this kind of like VIP dinner where Chris Dixon, the crypto partner at A16Z, was talking, and he's one of their investors and supporters. And he was saying like, I don't think we've had our iPhone moment, is what he was calling it. And in your language, it was the Facebook moment, but it's the same thing, right? Like they haven't had that iPhone moment where a particular application or particular use case like really took off because you had this convergence of technologies, convergence of mind share, everything kind of came together, culture, to have this like aha moment where everything just like kind of went crazy up and to the right. And you haven't had that application at the blockchain level yet. And I believe personally, he was using it in the context of saying IP could be, tokenized IP could be it, which I completely agree with. But I think more broadly speaking, real world assets or just tokenization as a concept when transmuted into some sort of like in the palm of your hand application where you have all of your assets under the sun,
100%.
in the palm of your hand, able to access at any time, any product, anything, anywhere. Like that's the holy grail.
Yeah, so you nailed it on the head there. You just teed me off. You just brought up RWAs. That is what Mantra does, your bread and butter. Just to sort of kick things off, give us sort of your thesis on RWAs, why they're so important, and how it's really sort of the convergence of blockchain and TradFi.
Sure. I mean, I think there's a couple layers to this. So, before we even started Mantra, which, is a whole history and whole story, I was working on a centralized exchange project, and the idea was to, have a centralized exchange where you could trade all different types of assets in one place: crypto, securities, FX, commodities, etc. This was like 2017, 2016, and just the timing was clearly not right. The technology wasn't there yet. There were so many different like limiting factors. Fast forward to today, I still firmly believe, just as I just mentioned, that is something that the world needs. 6, 7, 8 years later. And I think when it comes to blockchains in general, I mean, they're really just perfect financial ledgers. And, that just gives a perfect canvas for, asset tokenization to live on, because you can do so many interesting things when you take a blockchain ledger and then you add smart contracts on top, and then you make them composable and interoperable and all these different things that we're now being
100%.
able to do. You can start doing really, really cool stuff. You can, disintermediate, rent seekers. You can remove fees. You can make things more accessible. You can make things more programmable. So with all these things kind of converging into one, it just makes sense that assets will live on a blockchain, particularly financial ones or things that could have some sort of financial value behind them. So that for me just is like, okay, just that makes sense. So if we believe that, and we say this regularly, like on-chain is the new online, then you need a chain that supports the ability to bring assets online safely, legally, and composably, with, the current market, which is mainly, on-chain users are mainly crypto natives and degens. So you need to find that like product market fit in that sense as well. And I guess if you believe that that's a thing, then the next thing you're going to believe is, okay, where do these things trade? You're going to believe that there's going to be a venue for these things to be, interacted with, invested in, traded. So we're building like an app chain. That was the idea. And what has come down to is, instead of building like an app chain, more like the Cosmos model, we're building a kind of more of a layer one ecosystem at the chain protocol level. And then we're also building an application or an exchange for these things to trade, but that's kind of been segmented out and it's like its own separate thing now. And there's been a number of reasons why we did that. A lot of them from regulatory purposes. But that's kind of the thesis behind everything. And, again, like if you just look at the sheer numbers, like real world assets are a huge opportunity, one, and two, and huge opportunity for new capital to come into the crypto space, because right now there's a lot of recycling of capital.
Yes.
The only, it's not coming from retail right now. It's really like coming from BlackRock buying Bitcoin.
Yeah, exactly. One ecosystem to another. That's all it is.
Yeah, exactly.
It's a big old circle jerk.
100%.
One question I got to ask, and I get asked this all the time from my normie friends, family, network, whoever. They always ask me, Matt, why RWAs? They'll ask me, what areas of crypto interest you at the moment? Deep in AI-based crypto, and I always go with RWAs. I'm big on RWAs. I do think we're a couple of years out on it, but everyone always asks me this, and I probably tell them the same reasons you do, but I want to flip the ball over to your court. What do you tell them when someone asks you? Besides, is there anything sort of out of the ordinary cliche where it's just a more efficient system? Because that's really, I think, the bread and butter of RWAs is just a much more efficient way, like buying and selling a home, absolute shit show. Whereas if it's on the blockchain, way easier. Buying and selling a car, way easier. Art, anything. You can verify who the holder was. You can see what type of upkeep it had, blah, blah, blah. It just combines the best parts of the TradFi version of said asset, gives you a lot more enriched, beautiful data, and keeps it on chain, makes transferability, interoperability much better. Is there anything sort of outside of the cliche pitch that you tell them?
I think that's all correct. I guess I try to present it in a little bit more of like a personal story. So the way that I would say, why do you even do this, is I use the example of, okay, I'm like a white middle class, American who has access to almost any type of financial product if I want to, right? Like
Sure.
I could go open a Schwab or Robinhood or whatever if I wanted to.
Yep.
I live in Asia, so that makes it slightly more challenging, but I could. There's a portion of the population there that doesn't really have that type of access, but in general, there's access. But for me, as a person who's been in the crypto space or in blockchain for a long time, much of my wealth is in digital or tokenized fashion or form. And for me to go from my wallet to an exchange to a brokerage, to a bank to a brokerage, that's like four hops, costs, fees, taxes, all kinds of stuff. Shit show. That's in a privileged position. Let alone your example of like someone in Argentina who like their currency is devaluing, all over the place. I think actually this month was the best it's performed in 31 months or something like that. But historically, it's been a very poorly performing currency, and there's a number of countries around the world who have these issues, and they would love to be in anything but their native local currency. They would love to be in a tokenized, money market. They would love to have U.S. treasuries. They would even just love to have U.S. dollars, T-bills. Tether, right?
Yes.
Literally anything but their own thing on their own local currency. So, then the thing is they have mobile phones, they have crypto wallets, and that gives that access to something that they never had before. So why shouldn't they have access to the same type of products that I do? That's the pitch, right? Like,
yeah,
No,
that
goes for the whole world. Yeah,
that's a damn good point there. It really is. I want to jump into and then the second half of the show will be obviously everything about Mantra, but the institutional adoption of RWAs. A lot of the time, it seems like, especially in crypto, it's almost B2B first, then B2C. Like you need that sort of B2B use case. You need the big dogs, the institutions to get in. Yep. And as the institutions get in and start, pouring hundreds of millions or billions or trillions of dollars into the space, then the infrastructure gets better, blah, blah, blah. We all know the story. Then the average Joes and Josephines like us will get in. But what is going on the institutional side right now? Obviously, you have BlackRock. They're whipping up that RWA fund. I believe it's already whipped up, but you're a pro, you're an expert in this space. What's going on? What are these conversations sounding like in regards to institutions getting into the RWA space? Absolutely.
I mean, I would say, we've seen institutional product market fit before, we saw retail product market fit. And a lot of that is due to the fact that institutions are, or at least have been historically, okay with building on permissioned blockchain networks or permission ledgers. Yep. Whereas for us, it's like, that kind of sucks. So we would much rather work on a permissionless ledger, right? It's a lot more interesting. I would never, build a totally permissioned network. I think there's an area or reasoning for having some degree of permissioning in certain instances, but you need to have that permissionless access in others. So we're looking for that retail product market fit, and that's coming. I mean, I think one of our partners that we've worked with, pretty closely on a number of things is Ondo, and they've been one of the better performing RWA projects out there, one of the bigger ones. And they were the first one to really get a degree of product market fit with their tokenized treasury products, USDY and OUSG, on a permissionless blockchain, including on ours, actually. And I think they have 600 million in TVL, and total, I think total T-bills on permissionless chains is like 2 billion today. But that's still a drop in the ocean compared to like JP Morgan, which did, I think, like a trillion or something of tokenized bond settlements on Onyx, which is their permission network. So like, there's a long way to go, as you mentioned, from the retail side.
They did that much?
I'm pretty sure.
Holy crap.
I mean, I could be wrong, but I'm pretty sure it's been like a trillion over a year in terms of bond settlements on their network. I mean, it's a lot. Wow. It's a lot. And I think the thing that I'm seeing is obviously dependent on jurisdiction, depending on asset class. You are starting to have. I mean, banks all have digital asset arms. One of our investors is Laser Digital, which is the crypto arm of Demora. It's a fully crypto native business owned by a bank. And, we're talking to other people in similar situations that are investing in the space, participating in the space, significantly sophisticated in their thinking about the space. And in many instances, they're, while slowly but surely they are coming on chain, they are participating in RWA, pools and vaults and different types of things. And, I think one of the things that we've, seen over, particularly like the last month or so, because we have this USDY pool, which is like effectively like a tokenized treasury pool where you can deposit stable coins. You get, the USDY, tokenized treasury product. It has a little bit of Ondo rewards. It has a lot of OM rewards. Do your own research, not financial advice, just stating what, the situation is. We're seeing like a participation rate of like roughly, 10% of the market being retail and about 90% being institutional in terms of TVL. And hopefully that becomes a little bit closer to par. I don't think it'll ever be exactly 50-50, but if we can get
100%.
closer to 25-75, like that'd be cool. But it is an educational process, and you're starting to get people to understand that, hey, actually, maybe it is cool for me to have a 5, 10, 15% yield, but I'm safe.
Yep.
And I'm not going to get rugged, and
Exactly.
I'm not going to have the coin go down 90%, while I'm stuck in a yield farm.
And that's hella appealing to TradFi. Like in TradFi traditional yields, you're looking at what, like 1 to 5 ticks, maybe, like, maybe 5 if you're lucky. Whereas in crypto, a couple of years ago, we don't need to name names. We all know who they are. It's like, all right, if you're giving me, 200%, 3, 4, 500% APY, like, yeah, the dominoes, the house is probably going to fall. But whereas you guys and people in the space are offering a very legit 10 to 15 ticks, like that's pretty darn sexy with a sub 1% risk. Like, any risk analyst is going to look at that and be like, all right, this is legit. Let's throw some cake at this. And this is what we love.
Absolutely.
This is what we love to see. We got to take a quick break here, JP. Give a huge shout out to our sponsor of the show. When we get back, we're going to keep buzzing on Mantra, talk about some of the challenges of building a regulated L1 RWA blockchain and some of the incredible work you guys are doing with Mag Global, Novus Aviation, and all that fun stuff. Until then, huge shout out to Prime XPT, longtime sponsors and friends of the Crypto News podcast. We love them as they offer a robust trading system for both beginners and professional traders. It doesn't matter if you're a rookie or a vet, you can easily design and customize your layouts and widgets to best fit your trading style. Prime XPT is also running an exclusive promo for listeners of the Crypto News pod. Use the promo code CryptoNews50. That is CryptoNews50, all one word, to take advantage of this offer and receive 50% of your deposit credited to your trading account. Again, that is CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. And now back to the show with JP. Let's jump right into Mantra for a second. Why create an L1? I know why, but you gotta give us the goods here for the listeners. It's funny when this pod first started in 2021. Everyone was all about the L2s, and even last year everyone's about the L3s. But it seems like the narrative has reversed, and it's now back to we need to own front end access. It's got to be an L1. The whole thing not even just has to be ours, but it needs to be speedy, and it's got to be an L1. Why did you guys choose to build an RWA L1 blockchain that is also regulated? And I'd love if you could talk about some of the challenges that goes along with this as well.
So, we have a number of reasons why we think it's really critically important to have a purpose-built layer 1 solution for real-world assets. And kind of our goal right now is to really be the chain of records for RWA provenance. Maybe ex-US for now, right? And we want, it can go to other ecosystems. It can go to L2s. It can go to other chains, but we want them to be recorded on our L1 mainnet. That's kind of our longer term ambition. I think it's been important for us to really take a look at what we were trying to build. And, as I mentioned earlier, right, we were like first building actually this exchange product, an on-chain exchange. And we're like, okay, what solutions can we use today? And, ETH, we were actually literally just building it on ETH mainnet at the time. So this is like, a few years back. And there's obviously issues with scalability and costs and all number of different things. Then you talk about L2s, and actually that was really right around the time when they were starting to become a little bit more popular, and it wasn't a big thing yet, because Arbitrum and Optimism were just getting started, and then you had all the ZK stuff, and it was really just kind of proliferating. And then now there's like L3s.
Next year we're gonna have L4s.
please no. We're stopping at L2s. Basically, one of the issues we saw was like, okay, this is a super complex thing that if you're really talking about like mass non-crypto native adoption, like they don't care. Like this is too complicated for them. Bridging is an issue. It's really complicated. Like that was an issue. So that was number one. Number two, we wanted sovereignty over a validator set, which you don't get with anything but an L1. So in order to kind of like, I will say we are not a regulated L1, but we are, supporting regulated use cases, and our exchange is a regulated one, or will be a regulated one. So we see it more at the application layer where you see regulatory requirements, other than when at the protocol layer, when you're selling tokens or distributing tokens, like that's a regulated activity. But that, we're not a regulated L1. We're a permissionless L1 that has permissioned and regulated, use cases, if that makes sense. But it's really important for us to maintain that sovereignty of the validators. And so if you need to, you can, upgrade or enhance yourself to be, ready for any sort of regulatory change at a global level. And then I think third is really more of a philosophical idea, which is, and you know yourself, right? Like, why would we not want to have effectively unlimited upside? And what I mean by that is, like, if you're a L2, you're going to be capped by the, layer 1 that you're built on. Or if you're an L3, then the layer 2.
So I feel like it's easier to get started as an L2, like the infrastructure's there.
100%.
It's like the what's, long-term gain, short-term pain, and vice versa. Of course. You know what I mean? Yeah.
100%. I mean, we just felt, because we were literally building it and we needed it, like we just felt that the world needed a layer 1 for real world assets. And if the opportunity is as big as we believe it to be, like that's a $100+ billion type of thing. I mean, it's huge. Real world assets are multi-trillions of dollars. And if, you become the layer 1 of provenance for, the vast majority, or at least a significant portion of real world assets, that is a huge opportunity. And that's something that's attractive, and it's worth putting in the work. It's worth putting in the time. It's worth putting in the effort.
100%. I want to jump into Mag Global here. You guys have done some incredible work with Mag Global. We'll sort of segue this into Novus Aviation as well. Full disclosure, I obviously am not from Dubai, been there a couple of times, but never heard of either of those companies. And then in doing research for the show, looked up Mag Global, and I was like, holy shit, these guys own a lot of real estate. How did you get in bed with them? Walk me through that whole story. It's super cool. Again, especially in Dubai, these guys are ripe for innovation and any type of emerging asset. Seems like a perfect partnership. How did this whole thing come to fruition? And tell us a little bit about this partnership.
Yeah, absolutely. So we were connected with the CEO, who's the son of the family, and he's the second gen. His name's Talal, awesome guy. He's really trying to push the edge of the envelope. He honestly does not need to use tokenization to just maintain his business and be fine, right? Like, they're a multi-billion-dollar, real estate conglomerate with business interests in all number of different things. They don't need to do stuff like this that is kind of pushing the edge of the envelope if they don't want to.
100%.
And we spent a lot of time with him, and fortunately, he is a forward-thinking, innovative, person. He wants to take the company not in a different direction, but just wants to be seen as an industry leader, an innovator in the space.
Yep.
And obviously, if you're a smart, intelligent, person like that with ambition, you're going to want to try to push the edge of the envelope a little bit and see what you can do. So we, fortunately, were able to meet them, build a relationship over time, really worked on how we can create something that's legitimately value add for everyone involved. And it's important that you are, when you're doing anything tokenized, like, there needs to be legitimate value for the end user. Like, it needs to be better than what they get in the real world. One.
Yes.
And two, honestly, for the issuer, it needs to be at least as good as the current status. Period. And we've kind of found a model that works, that we can make that happen. And we've been able to kind of create a really interesting novel structure that would be very hard to do if you weren't doing it in a tokenized form. And fortunately, again, Talal and the Mag team has been really supportive of that idea and trying to figure out ways to push the envelope and do something that's cool, innovative, and also brings a lot of attention to the space. And I think Dubai is just a great place for real estate tokenization. Because of it being one of the hottest real estate markets, massive crypto hub, forward-thinking progressive government, as well as forward-thinking and progressive regulatory, body there. And it just was a perfect place and a perfect opportunity, and it kind of like right person or right team, right place, right time. And it all just came together really nicely. So, we're super excited to work with them. We announced a $500 million deal with them, and we're working on doing, a lot more together.
So cool. Again, homes, houses, real estate, sort of, one of the pillars of RWAs, just super easy for people to understand as one of, I feel
Absolutely.
like one of the childhood dreams of every person on the planet is to one day own real estate, own your own home, apartment, condo, whatever you want to call it.
Yep.
Or villa in the Palms, whatever they're, in Palm Jeremiah, whatever the case may be. But
Yep.
Novus Aviation, this is a super cool one, because when I think of RWAs, full disclosure, and I'd be lying through my teeth if I said I would have thought of planes. I didn't think of planes one bit. Walk me through this. How did this go down as well? And tell us a little bit about this one too.
So, similar story where, unfortunately we have a very strong, network in Dubai. A lot of our biggest investors are in the UAE and so Dubai and Abu Dhabi. We've been spending a lot of time there in the process of getting our licensing for the exchange product. And it built up a lot of credibility because of that. And we've built up a very strong network of investors, of, business people, and of really strong institutional partners there. And, honestly, the family behind Novus, had basically learned about us through, connections that they had, and were interested in, exploring different tokenization opportunities. We really do like these kind of interesting novel use cases. And the other thing that I think was important was, we actually, funnily enough, we're talking about like watches before the show. And I think tokenization of like collectibles and things like that is great. But, I use the example, how many watches does it take to tokenize $1 billion worth of watches? A shitload of watches. Whereas how many Boeings or Airbuses do you need to tokenize to get to $1 billion? Or how many plots of real estate do you need? Not that many. Like you can talk to one group of people and that's like a big number. The other thing is these products, whether it's real estate or in this instance, like financialized, whether it's like a convertible note or a tokenized fund that has aviation interests or a plane or whatever it may be, because we're exploring all those different avenues. There's already a captive audience of institutional investors who are buying this irrespective of it being in tokenized form. And if you can say, okay, we're going to give it to you in tokenized form, it may even have more utility behind it. It may have more financial value behind it because we're incentivizing, subsidizing interest and yield. Obviously, that's one of the points of bringing on TVL, bringing on users, customer acquisition cost effectively. Like they're like, okay, that's great. Perfect. I'd rather get an additional 2 to 3% on the thing that I was already going to buy anyway. Just, teach me how to do it. And these are big numbers. So, that was another really interesting one. We're pretty excited about the different opportunities of doing different types of deal structures there. Like one could be, legitimately an interest-bearing like note that is effectively like a yield strategy of sorts that has equity appreciation on the potential sale of the asset. Or the other one is just literally owning a piece of something that, again, would potentially appreciate over time due to, how it's being leased out and sold and whatnot. So there's a number of different structures that we're looking at. And it's pretty cool to explore because, again, these are big number deals. And, we want to be, again, that leader with all these different use cases for real world assets. But, as my job as the founder is to kind of see where you're getting traction. And then immediately when you see traction, double down. And double down again. So, 100%. Where we're seeing that particularly is real estate, financial products, whether that's funds, aviation things, money market, private credit, et cetera. And then the third one I think that we're looking at heavily is IP and content. And that's where, the stuff with Story Protocol was pretty exciting. So we're, I think it's a very cool project and we're excited to explore more with them.
That's super cool. JP, we are getting a little tight for time here, my friend. A couple more questions and we will wrap up. What does the future of RWA look like? What is the sort of future technological innovation of the RWA space look like? Maybe sort of present day to when perhaps, I think it's going to pop off 2, 3, 4, 5 years from now when we're really going to start to see the momentum train leaving the station and really rolling. What's going to change from now until then? Yeah,
so I'm seeing it kind of in like 3 phases. We're in phase 1 right now, and I think phase 1 is supply side. And, basically bringing on assets to, an on-chain environment that are high quality. I think there's always opportunities to bring assets on-chain because honestly, creating the token is not the hard part, but creating legitimate ones that are, legally bound between the token and the real world, that are high quality in nature and that are actually something people want to buy is the first phase. And just bringing on as much TVL, as many interesting use cases, working with governments to make sure that these things, again, transport themselves from the economic value and rights in the real world to the token. So that's phase one, and I think we're there. And we're exploring on a number of different ways to really push the boundaries. Phase two is really the liquidity and the trading, and that's really where there's a lot of regulatory actions around it. So where are there venues for this? How does retail get involved? Like, are these things securities? There's a number of different questions that need to be answered, particularly on a global scale, because like this is basically an asset class by asset class, jurisdiction by jurisdiction business, and it's really just like a go out there one by one, grind it out, find people who want to buy in the primary, find people who want to buy in the secondary, build up on-chain liquidity. That shit takes time. But that's why I said earlier, like this is a $1 trillion industry or $1 trillion opportunity. That's worth the time, in my opinion. Phase three is the composability, which is that secret like aha moment. RWAs in the palm of your hand, able to do anything. So composable in different DeFi applications, composable across chain, composable and be able to use as like margin and collateral and different types of things. You can use them in different financial primitives. That makes them accessible, across any chain or any environment, across jurisdictions. That's the third phase. That's going to take some time, but once you get there, that's the iPhone moment.
Boom, we're there. Well said. Last question here, mate. The future of Mantra. What do you guys have cooking up over the next couple of weeks, months, years? What does the future of Mantra look like?
Yeah. So, obviously, we want to be the leader in asset tokenization in the space. We have mainnet coming imminently. I have kind of hinted a little bit at a lot of stuff happening in what we're calling Ohmtober. So be on the lookout for what's up next month.
I love that.
Yeah, so a lot of big RWA deals, some exciting partnerships. Going to be at all the different events and really kind of spreading the word. So it's going to be a pretty exciting month and close out to the end of the year. But next year we're excited about where this space can go and kind of continuing to use our I think our outsized ability to bring on really interesting high quality assets in size and pushing those TVL numbers. I made like some relatively bold prediction that we would have $100 billion of RWAs on Mantra by the end of 2026. On Twitter, I said that. And I actually just looked it up, and the peak.
Did you get roasted for that?
No, not at all. No, people loved it.
I love that.
I had a lot of bookmarks, so we'll see what happens in December 31, 2026. But I just looked it up, and actually, like the all-time peak TVL of all crypto was in November 2021, and it was like 180B. But if you're thinking about a multi-trillion-dollar asset class, like where could that be in 26, 27, 28 months? Honestly, it could be pretty significant, right? Like if you can do a single deal that brings $1 billion. And there's a lot of that opportunity. Like that's a whole different ballgame, right? And we're talking literally, we're doing $1 billion deals right now.
100%.
Multi-billion-dollar deals right now.
That's doable. That's doable.
Yeah.
And again, if you're not going to shoot for the stars, well, like what's the point of shooting?
I agree, 100%. Shoot or shoot.
Shoot or shoot. I love it. JP, what an episode! This was a lot of fun, man. Would love to meet you in person one day. And one quick thing before you go: are you a golfer at all?
I am. I love golfing. Dude,
you look exactly like Bryson. Has anyone ever told you
really?
that? Yeah, man. Maybe it's just the camera angle or whatever, but you look like, as we're recording, I'm like, fuck, I'm on a podcast with Bryson DeChambeau right now. You literally look like Bryson. Hey, he's a good looking cat too. And he's top 5 golfer in the world.
He's amazing, yeah.
Hits 380 yard bombs. Oh my God.
I don't hit 380 yard bombs. I wish.
I love it. Hey, before you let us go, please let myself and our listeners know where they can find you personally and, of course, Mantra online and on socials.
Sure. So, I'm super active in our Telegram. So if you find the Mantra official Telegram or Discord, usually I'm reachable. My Twitter is JP_Mullin, MULLIN 888. Mantra, you can check our website, www.mantrachain.io. We're working on .com. That's going to happen at some point. And the Twitter is Mantra_chain.
Wait, someone snagged the .com from you guys?
No, it's not. So there's a Mantra.com that someone owns, but the Mantra is a very, it's a pretty broad, 100%. Well-used word.
That's got to be a pretty penny, eh?
Not cheap.
Yeah.
Not
domain
cheap.
snipers don't. They're the best, but they're the worst. I have a couple that I'm sitting on as well. I still get offers from GoDaddy broker service. John Smith is offering you $500, and it's a fire domain. Like, John, fuck off! I'm not giving you this for $500.
Yeah, no way. No way.
Mantras. That's probably a 6-figure purchase rate there. When you do, let me know. I love learning about domain transactions. But really appreciate you coming on. Open invite for round 2, and hopefully we'll get on the links one day and we'll hit some bombs.
100%, man. Appreciate that. And good luck in the tourney you have later as well.
Thank you, mate. Folks, what an episode with JP Mullin, co-founder of Mantra. What an episode. We discussed everything RWAs, the convergence of blockchain and TradFi, institutional adoption, building an RWA-based L1, crypto needs the consumer killer app. And one of my favorite parts is the 3 phases of RWA: adoption, liquidity, and discoverability. And of course, the future of Mantra. Huge shout out to JP and the team for making this happen. If you guys enjoyed this one, I hope you did. Please do subscribe. It would mean the world to my team and I. Speaking of the team, love you guys. Thank you so much for everything, especially you, Stas. You are the man as always. And back to the listeners, keep on growing those bags and keep on staying healthy, wealthy, and happy. Bye for now. We'll see you guys in the next one. Ciao.